Welcome to another episode of Get Paid for Your Pad. Today, my guest on the show is Mr. Ryan Anderson. He had a significant short-term rental management business, but through the crisis, he's downsized and he's really pivoted his business model. So that's what we're going to be talking about today. So Ryan, welcome to the show.
Thank you so much for having me, Jasper. Glad to be here.
Absolutely. So you're the CEO and founder of Sojourn. Can you tell us a little bit more about your business, how it was pre-COVID and what it looks like now?
So Sojourn was doing the master lease Airbnb model. We had initially started in Los Angeles and expanded into Arizona, then into New York City, Puerto Rico, Mexico, and Colombia. Pre-COVID, we were close to 200 active units across those 4 countries and all those markets. Post-COVID, we've given back a lot of our master lease units, almost all of them, to be completely honest.
And what does your business look like right now?
Right now, we're sitting on. So we made the determination that, on a lower margin business, the master lease model, we've clearly seen that it's problematic. WeWork had that problem in the corporate office space, and we've seen larger, the large fundraise players like Gay Alfred and Laird shutting down, Sonder downsizing, all of that. So. When the cash flow stops, there's only so many months you can go before all the cash gets burned up on that model. So our intention and our shift is looking at actually, one, I truly believe that the owner operators are going to win in the long run. Just based on when we look at how the hotel industry evolved. Hotels didn't disconnect themselves from being the owners of the assets like heavily until the 90s when the strategy changed. But by then, all these hotel companies have built up such good brand recognition and goodwill that they could carry themselves on that alone to maintain these long-term management contracts on these assets. So I firmly believe that in the long run, the owner-operators are going to be the winners just because there's only so much meat on the bone. So we're looking at getting launched on some real estate investment syndications, start light, buying up multifamily complexes where we can run on a flexible living model, not necessarily short term, because we see that the trends also that we're getting longer term stays right now, but people want the turnkey options, they want the flexibility. And then there's a little side pivot that we're also kind of doing. We're just testing the market, but we're testing the market for camper van rentals as well. So we're doing our first custom camper van conversion, and we're working on it right now. Test one, see how it goes. The demand for camper van rentals has been going up dramatically in the last, basically ever since COVID started, because people still want to travel, but they're afraid of flying. They're afraid to go to urban markets, or they don't even desire to. And that's where Sojourn was heavily concentrated, in big major cities. So it's to be determined. We'll see, but the data suggests that it should go well. So,
yeah, and that's something that we've seen across a lot of markets where the international travel has pretty much come to a halt. As you said, people still want to go on holiday, so they're looking at destinations that are closer to their home. Secondary markets, drive-to destination. And people are really looking to socially distance themselves, right? So I can imagine that, staying at a large hotel that has like thousands of rooms is also not very attractive, right? And so you mentioned the camper van. That's a really interesting point, right? Because that kind of fits everything that people are looking for right now, right? They don't really want to mix with other people. but they don't want to fly anywhere. So just renting a camper van and driving around for a week through nature to through remote areas. That to me sounds like almost like the perfect COVID holiday, if you will.
Yeah, and I'll be completely honest. There was also the point where I was like, I had moved to Puerto Rico 3 years ago for their tax laws, tax advantages. No tax advantages to take advantage of at the moment. Too many losses piled up. I was realizing, I'm going to have to go back to Los Angeles to regroup. And, I have apartments here still that we're operating, and I just didn't want to have to move into them because they're so expensive. It's like, well, I could just build like a nice posh camper van and just live out of that with the rest of the Venetians in Venice Beach. So, so it's a bit of a hedge on my own living costs at the same time. But it's certainly something to be excited about, which is certainly everyone needs something to be excited about right now. And it's hard. I think people are finding it's hard and difficult to have something to be excited about. But I mean, I'm assuming we'll get into this, but as an entrepreneur, it's always we have to carry we always have to have that tremendous hope and that optimism to see through any dark time. And I would say it is incredibly difficult right now with the pandemic and COVID to think that way. But being able to just try something new, try something different, take a new risk, a calculated risk. Don't be a dummy, but just in order to just even to keep momentum going and to not become stuck in a state of inertia.
Mm-hmm. Yeah. And, you bringing up the camper vans reminds me, I interviewed somebody from Outdoorsy. Have you heard of Outdoorsy?
Oh, of course.
Right. Yeah. So, so I remember when I was talking about Outdoorsy, can't remember which episode it was, but it was a while ago. He was telling me that there were some entrepreneurs who were renting camper vans or even buying camper vans to rent them out on Outdoorsy, and they were making some of them are doing really well with that. And what I found interesting about the camper van model as well is that you can move it, right? So for example, let's say of course there's festivals like Burning Man, but also let's say there's a festivals, obviously the festivals right now are not, they're not happening, but that was just something that I found interesting. Is it's a home that you can move around, so you can kind of drive it to whatever the demand is. But yeah, are you looking to buy the camper vans, or are you looking to rent them and then re-rent them?
I already bought one. So we bought a Ford Transit 350 cargo van. So it's the same vans you see the Amazon trucks driving all over the place. I mean, and it's literally it's just like an aluminum box. So
right.
We're going to be building a little house on wheels. And that you're right about that. It's mobile. It can go anywhere. So homes aren't so mobile. So
most are not. No.
Good, strategy for being able to adjust to wherever the demand is geographically.
Right. So right now people want to be as remote as possible. So you could, park it on the mountain somewhere in the middle of nowhere. And you could even create an Airbnb listing, right? With a mobile home. Just create a listing. And some of those listings do really, really well. I've seen what you call them, those Airstreams on
the
Airbnb.
Airstreams.
Yeah. And because it's all about the experience, right? So if you create just a cool experience around it and take some good pictures and in a great location, I could totally see that doing pretty well.
Yeah, in the early days when we got started, so I got into the business, the Airbnb ecosystem in 2013, but I got into it in Venice Beach. And the reality was I was working for another startup. I had failed a company in Costa Rica, moved back to the United States, broke, I was working for another startup, but I wanted to get back to being an entrepreneur. And I ended up leaving that startup, but I still didn't have any money. So I just threw my place on Airbnb in Venice Beach back then. And obviously it did very well. And that was how I broke into the ecosystem. But in the early days in Venice, there were a lot of Airstreams and trailers in people's backyards in Venice Beach and Los Angeles that were on Airbnb. Unfortunately, when Los Angeles passed their regulation finally in 2018, one of the rules was you couldn't have a non-permanent structure like an RV or a camper, like housing people. So you weren't going to get a home sharing permit. So you do have to be people have to be mindful of what the regulations are in their cities and their areas. And if they want to be scofflaws, that's their own decision. I mean, I've been known to be a scofflaw at times, so I get it. But that game eventually catches up to you.
Yeah, yeah, for sure. Like, yeah, I, if I'm honest, I've been in the gray zone a little bit in the past as well. But I agree with you. If you want to build something sustainable, then you want to comply with all the laws and regulations. Going back to that master lease model, I mean, you mentioned a lot of people that were running that model have gotten burned. Even the bigger players. You mentioned Stale, Fred, Lyric, Sonder. Do you think that model is now gone? Do you think everyone's just going to pivot to a different model?
No, I don't think it's gone because this was the problem with the model. It's just that, I mean, it's a function of supply and demand. Um, and so, like, if your rent basis is okay based on what you can earn, like, versus short term, I mean, it's really about, like, what do you have to pay to, how much do you have to pay to make that dollar of profit, right? Or however you want to look at it. And so, this is one of the reasons, like, so we acquired Host Night and we went into Latin America. And one of the big reasons I did that was I was very concerned, one, about regulation in the United States, that the cities were heating up, but also all the big venture funded players like the Saunders, the Stay Alfreds, the Delmios, the Lyrics. What I was witnessing in the United States across all these cities, they were all competing and bidding up like the prices of getting these leases. And there was a point where it fundamentally didn't make sense, like what they were paying. Like, this is so risky. And I knew no one was really doing it down south, like south of the border. But even like the counterparties that, like, the people that we worked with south of the border, they were multinational U.S. based private equity real estate firms. So even in the negotiations, I feel that same pricing pressure was coming through when we were negotiating our master lease contracts in Mexico and so forth, in Puerto Rico. So do I think it'll come back? Yeah, I think what's going to happen, what has happened is we've had this big shock economically. A lot of the supply has gone away. You have the guys who are tough and tenacious and are figuring out how to hold on to the supply, and we'll figure out how to get through this crisis. And then they're going to see, like, when things normalize again at some point in the future, they're going to see big returns again. And then what's going to happen is other people are going to say, "Oh, there's returns here. Let's do this." But it's like the stock market; it's a moving target,
Yeah, for sure. What are some of the learning lessons for you going through this crisis? I imagine it must have been a pretty stressful time.
Yeah, I mean, like, having to shut down so much. I mean, as of today, I only have 5 properties that we're working with, and 3 of them are on the long-term market, and I have 2 in Venice Beach that we're running short-term. We do have contracts in Colombia once things normalize to take on over 100 apartments, and that would be under the management model, right? But it's very hard, as an entrepreneur, as a business owner, to go through that. This isn't the first time that I've taken a major hit in the game. So it's not my first company. So that probably makes it a little easier to deal with. But there's a couple of big learnings I have here. One is you've got to stay focused on fundamentals. So we started trying to, let's call it blitz scale in Latin America. And, for Sojourn in the last 2 years, like, we probably brought in like 1.5 to 1.8 million in debt and equity. but we were trying to move fast because we were watching our competitors move fast in the United States. And one of the things that we had been looking at I had been looking at for several years was like, you really got to be the owner operator, because your landlords are always going to be able to squeeze you or increase rent unless you really lock in very long-term leases. But then on the flip side of locking in a long-term lease, well, what happens when you can't pay it? I mean, we had buildings with 10-year leases when COVID was happening. It's like, okay, we have to negotiate and get out of this, because 10 years of rent, I mean, that's a lot of money that we're on the hook for. So, but we should have been paying closer attention to the fundamentals. The one thing that's cash flow is great when things were on, and then it all stopped. Okay. I look back over the last 3 years, the one property I bought where me and some partners, we bought a high-rise condo in Vegas. We put $21,000 on the down payment, like nothing. It was 5%. And then we put another $24,000 into furnishings and design. I still own that property with an investor, but our equity is now at like $150,000 over. That's what it grew to over 3 years. And we got a long-term renter in there. We're not losing the property, so we're not losing the asset. We're not losing the wealth generation. And I kick myself that I knew this. I felt this. I have a finance background. I used to work on Wall Street, and I always have been of the mindset, you got to be the asset owner if you really want to build wealth over time. And had I put more energy into, actually acquiring real estate assets and operating less, well, I'd be in a better position. We'd be in a better position right now. So one key takeaway is don't get caught up into the hype and the noise surrounding you. You got to look at the fundamentals. You got to look at what makes sense financially, and you got to stay kind of disciplined and strict with that, because there was a lot of hype and noise. And I mean, for these companies that had raised so much money to just vanish overnight, I mean, it's kind of insane.
Yeah, 100%. I like what you're saying. We have to stay focused. We have to stay disciplined. We have to look at the fundamentals of our business model. We have to think about, what are the different scenarios that could unfold and how we do in those scenarios. But at the same time, I think you've been an entrepreneur for a very long time, right?
Yeah, about the last decade. It's been about a decade.
Right.
Yeah.
So,
and an entrepreneur is always an entrepreneur in their heart. I mean, it was always since I was a little kid, I had that itch to just always do my own thing and play by my own rules. So,
right. Yeah. And that's the point I was going to make is on one hand, you want to stay disciplined, but at the same time, it's also sort of natural to jump on opportunities, right? So, when you see that opportunity in that master lease model where you can rent all these apartments and you're making 2x renting them out short term, I think a lot of entrepreneurs like yourself saw that opportunity and jumped on it, which is it's understandable because it's just kind of out there, and it's fairly straightforward, fairly simple to monetize it, right?
Yeah,
that opportunity. So you've been in quite a few countries, right? You mentioned Colombia, you mentioned Mexico, Puerto Rico. I was going to ask you why did you go into so many different markets? Because most operators they kind of stick to their one market. Is that because you mentioned you were just seeing the competition in the major U.S. markets rise so much that you wanted to look for opportunities outside?
Yeah, absolutely. I mean, going back, I was concerned about regulation in the United States. When you get into emerging markets, governments are just less organized. They're slower. Also, our industry, we drive a lot of, we have the potential to drive a lot of, we drive a lot of tax dollars. Airbnb drives a lot of tax dollars to the cities. Now, maybe the cities say we don't want it, right? Because the hotels have them in their back pocket. But it's not the same sentiment south of the border. So regulation, I wasn't concerned that regulation would do what it was doing in the United States because these countries, they need that money. and tourism's a much larger share of their economy too. So they're generally much more tourism friendly. And to clarify, we didn't just like go and launch all these markets at once. We acquired and brought in Host Tonight that was already operating in New York City, Mexico City, and Bogota, and Cartagena, Colombia. So we were leaning on Host Night for expertise in those Latin cities. I had initially kind of worked on it to expand it, and well, I moved from I took it from LA, launched Arizona, and that was a play just on the regulation because the state had made it so you couldn't make Airbnbs illegal, and then I was launching Puerto Rico. But I will say, Host Night operated on the co-hosting model. It only did single channel advertising on Airbnb, and so there was a messy transition and getting that team all up to speed on doing the full service advertising distribution across multiple channels. What that means, how that had to be set up, and if I were to do it over, I would have done it slower. I would have done it. I wouldn't have deployed as much resources right out of the gate towards it. It would have taken more time and been more patient, because acquisitions are messy. I don't care who you are. I don't care if you're, if you're General Electric, if you're Amazon, if you're Marriott acquiring Starwood. Acquisitions are always messy.
Yeah, and that's interesting that you mentioned, going slower, because one thing over the last 3 years or so, and I've always been a small operator, right? But through this podcast and through STR Legends and Profit Academy, I've met so many large operators, and one thing that always kind of blows my mind is, they'd run 100, 150 units, and I'd ask them hey, when did you start? And then they'd be oh, last year, or a year and a half ago. I'm just thinking that just sounds insane to me.
It is insane. Last year, when we were scaling rapidly, I remember over the summer, I had bought a new motorcycle. I love riding motorcycles. It's the one thing that'll get me out of my head. When you ride a motorcycle, if you're not focused on riding the motorcycle, you're going to die. So you kind of forget about everything else. It's forced forgetting about everything else. But I had bought a motorcycle out on north of Virginia Beach, and I rode it from the Atlantic Ocean to Los Angeles. But on the trip, I stayed at several of our competitors just to see how they were doing, like Sonder, Lyric, Wander Jaunt. And to be honest, I wasn't really that impressed. I could spot all the things that were getting missed. And it was oh, this is probably just a function of growing too fast. We're in the hospitality industry. You really got to focus on how do you nail it for the guest? That guest experience. How do you do better than the next guy? How do you do better than the next company? And you can't blitz scale that aspect. Blitz scaling software is one thing. Blitz scaling real estate and people, it doesn't work.
Right. So you're gonna going forward in the future, you're gonna take a bit of a slower pace when it comes to expanding.
Yeah, because if you look if we're gonna focus on buying and ownership and doing smaller deals, but earning our keep and earning, our creating the wealth through the real estate itself. Like I said, the Vegas property I bought, there's 150,000 in equity in it now. We only put 21,000 down, and that's a little over 3 years. So, it's important, what I've even learned with myself is it's very important, to just enjoy the journey and not be so hyper focused on the destination. Because the journey is the bulk of what we've got in life. I mean, we have our moments of achievement where we reach the destination, but hell, if you're not enjoying the ride and you're not doing it right, what's the point? So I think we're going to be very comfortable to grow slower, to grow wiser. Uh, I'm sure everyone had this problem with the master lease model, but like when COVID started, those negotiations with landlords, they were not fun. You know, and I had to have those negotiations across 4 countries at the same time. Um, I mean, those were the kinds of meetings I wanted to do in person too, because like, I mean, they're tense meetings, and it's like you really want. I It's hard to convey over the phone. It's hard to convey over a Zoom call, like what you really want to convey, and like the level having to persuade people of your opinion. Because I called all of our people like in March. Um, we were heavily weighted in Arizona. So Major League Baseball spring training, like in Arizona, like you have 3 months to just blow up, and that's where you earn most of your revenue. And we were like right in that, and they canceled Major League Baseball spring training, and I was like, this is going to be bad. Um, and you know, we looked at what was going on with COVID, and I immediately reached out to everyone. I said, hey, this is all going to grind to a halt. You need to either take your properties back, or we can run management during the time period. But if you feel like you can get long-term tenants in now, this is your loss mitigating strategy. So I didn't want to like try to do a holdout on any of these guys because I didn't want to hurt them. But they probably thought my opinion, they maybe didn't even necessarily agree with me when I was saying it. It's the middle of March, and we saw it coming, but you know, 4 months on, 5 months on, whatever it is now, we see how bad it's been. And so even that, trying to persuade people like that my opinion on what was going to happen was correct and that everything was going to grind to a halt, you know, that was difficult. So I'd rather not have to deal with landlords. I'd rather be the landlord going forward in the future.
Dude, I couldn't agree more. I couldn't agree more. That's always been my dream. Has always been I want to own properties in different locations around the world, locations that I love to go to and love to stay at, and then rent them out when I'm not there. So yeah, like you said, like, you know, I don't have any bookings right now, or hardly any bookings. But like you said, you know, I still own the assets. And you know, over time they typically appreciate in price. And you know, when things get back to when travel comes back, so my properties are mostly in international destinations. So it might take a while. But the asset's still there, right? So I'm just losing out on some income. But yeah, man, that's really interesting. You've got a really interesting story. I want to get you back on the podcast in like a year or so and see where you're at with those camper vans, or you know, see if you've gone down the road and buy more properties. But thank you for sharing your story. I know it must have been a difficult time. So thanks for, you know, being open and vulnerable and sharing all of that. Any final words before we wrap this up?
Yeah, I think the last learning I had in all this was like, when you're building a company, you know, when you're building a brand, like the brand has to be you. Like it needs to reflect who you are. It needs to reflect what you enjoy. Otherwise, what's the point? And so even like when we look at getting into camper vans and the like that, I mean, I'm a thrill seeker. I love adventure. So having lots of urban inventory is great for the travel aspect. Pop from big city to big city, you know, yeah, go clubbing, fun. But the brand Sojourn 2.0, I mean, the focus has to be on building a brand it's reflective of who I am and my personality, because I'm the guy driving it forward as the founder. So I just admonish everyone, as you build your companies, make sure that is a top priority, because money is awesome. It's fun to have lots of it, But when times get tough, if the only thing motivating you is money, it's not going to be a big enough motivator.
Dude, that's great. That's great advice, man. Appreciate that.
You're welcome.
Awesome. All right, man. Thanks for being on the podcast. Thanks for being in our STR Legends community. It's been really fun getting to know you. And to the listeners, thank you for listening. And next Monday, we'll be back with another episode of Get Paid for Your Pet. So see you then.